Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner with us as always to talk all things markets. University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Friday to you. Harvest is picking up around the country. Fall is moving in. It looks like you're about ready to hit a warm patch next week, which is very unfall-like weather. But I feel like it is that time of year where everything is going to get busy, and it's going to leave a lot for us to talk about too on the livestock side of things.
Yeah, for sure. It is seem like fall is here and football season underway. My Kansas City Chiefs had a good win last night. So
squeaked by.
All is good. That's right.
We won't talk about the Packers game last Sunday, but that's okay. All right. So this week we're going to talk a little supply and demand, not necessarily the things we typically talk about in supply and demand numbers. We'll take a look at retail prices and we'll talk consumer sentiment. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan. So this week in cattle markets, fed cattle were 60 cents higher this week. Those feeder cattle markets were 4 to 8 lower this week, which I remind us that we didn't get a lot of tests last week, so we certainly see that weakness now coming through this week. On the future side, October live cattle futures contract was down 25 cents, and the October feeder cattle contract was down $4.85. We lost on the choice box beef price this week, down nearly $4.40. That now puts it $65.30 below year-ago levels. On the hog side, cash barrels and gilts were down 50 cents. While the October lean hog futures contract rose up on almost $3.70 on the week. The pork cutout value also gained nearly $3 this week on what were stronger ham prices, but also stronger belly prices.
Scott, on that box beef number, can we go too low too quickly? I mean, we've been declining where we've been year over year. Where is that balance where there's enough support and strength to provide support into prices, but it's not out of control like it was in recent years?
Yes, so we can certainly go too far. For me, the interesting pieces of data here. So we've often been concerned about this farm to wholesale margin being, too wide. Well, you look at what we've been doing. So cash cattle are up almost $19 relative to a year ago, while we're down $65 on the choice box beef price. We've narrowed the margin. Unfortunately, we've narrowed it by lower box beef prices more than we've seen higher cattle prices. I hope that doesn't continue going forward. I do think we have a chance as we get further into 23, especially for choice box beef to start moving higher as we get tighter on supplies. But your point is very good. That certainly been kind of tough on that choice box beef price of late.
You mentioned earlier we had a light test last week due to the shortened holiday week. That's going to show up a little bit as we take a comparison for week over week slaughter numbers. Let's talk about those numbers. Start first on the cattle side of things.
Yeah, so USDA tells us for the week ending September 17th, a run of 667,000 head of cattle. That's up 63,000 from a week ago. So there's your little bit of Labor Day holiday left over, but up 17,000 relative to a year ago. And on the hog side, a run of 2.465 million head this week. That's 222,000 head above a week ago, but 80,000 head below where we were a year ago.
Are we starting to see Saturday runs pull back exponentially? I know we had a really big Saturday run last week, obviously to make up some of that shortfall just because of the holiday on Monday. But really, when you start looking in comparison week over week, we're not seeing such big Saturday runs anymore. Is that kind of the maybe the theme that we'll see through the end of the year?
So I say likely. I think we only make big Saturday runs when we really need to, and I say that because I think it's hard to run the labor side of these plants as hard as we maybe traditionally have done. And so we tend to end up now with lighter Saturday runs as a result of that as well. We're not pushing on the supply side either, really. So I think we have room not to make those big runs on Saturday.
Let's talk year over year comparison. How are we looking on the cattle slaughter and hog slaughter side of things?
Yeah, total cattle slaughter year to date, 1.4% above a year ago, while we're down 3.3% in terms of hog slaughter.
Supply and demand report, interesting on the grain side of things. Always that September report is really interesting. But as we take a look at it on the livestock side of things, kind of just like all right, here we are.
So not big changes. I say generally, more supplies, whether that was really led by the changes in chicken production made by USDA this month. They raised both the 2022 projection as well as the 2023 projection on the chicken production side. So up almost 225 million pounds is now the change for 2023 estimates. I say all that because it makes per cap consumption about a half a pound higher this month relative to USDA's previous 2023 estimate. I think then when you look at what's happening with increases in chicken production, we're pulling down prices. So USDA lowered the 22 chicken price by nearly $3 and moved the 23 price down nearly $6. And those are really the big changes I think we saw out of this report, Megan.
How much, and this is very speculative, we're starting to see some high path avian influenza cases start to pop up again. How much could that potentially, if we have an active fall, come into play as we look ahead to USDA's numbers for the rest of the year and into 2023?
Yeah, so I think we're going to have this little bit of tug of war here, right? So we're getting some fairly good returns, and thus the industry's been trying to push production higher. I think the wild card, as you correctly point out, is this early high path AI that we're seeing already this year really come in to pull back production. I think that's yet to be determined. But if it were to happen, again, I think we'll get higher chicken prices, higher egg prices, higher turkey prices. It's taken the turkey industry, I think, a longer time to try to recover from some of the high path cases that occurred here in early 2022.
Let's talk feed prices. Anything real exciting in terms of input for the livestock side of things in this month's report?
So frankly, not really. USDA raised their projection for the 2022-2023 corn price by 10 cents. So not a big change, and left soybean meal unchanged relative to where they were in August. I don't think either. So corn yields, I don't think certainly surprised anyone as USDA moved those lower. Perhaps more surprise in terms of the downward adjustment in soybean yields, but nothing really big on that side of the ledger as well.
All right, let's talk consumer and retail side of things. Let's kick off with retail prices. What are we seeing? Let's start with beef and we'll get into pork, and I have a couple of questions to follow up there.
Yeah, so when you look at the overall, and I'm going to talk price levels here, we certainly made news this week with a 13.5% increase in the CPI for food away from home. But when you look at the beef side, choice beef for August came in at $7.58. That was actually 0.6% below where we were in July. For me, there on the interesting piece of news on the beef side. So a boneless sirloin steak price, according to the Bureau of Labor Statistics, was $10.31 in August. That was actually down 2.4% relative to July. Yet ground beef, BLS reported at $4.94, actually up 0.9% from July. So some consumer buy down going on, it would appear, and continuing. I shouldn't say this is the first month, but this idea that some of the higher valued products are less, and yet we're seeing some of the lower valued products where prices have been increasing. We can say the same thing on the pork side. So the overall pork retail price was unchanged, yet boneless chops rose 3.1% and came in at $4.60. And the Megan Grubner special sliced bacon was $7.37 in August, down 0.6%. So again, higher valued pork products going down, lower valued products going up.
How much is that economic outside influence coming into play here as we take a look at prices and maybe some indications that we're seeing some changes for consumers?
Yeah, so so this will be August data, right? So when we think about, fuel prices being lower, we really didn't start to see that until we were halfway through August, as I remember. And so I think consumers are getting more cautious about how do I save, or how do I cut spending, I should say, under what was a much tighter budget situation. And I think that's reflected in this difference in some of these higher value products going down and lower value products going up. Consumers buying down for a period of time. I'll wait and see whether that continues as fuel prices move lower. Maybe when we get the September numbers, it won't look quite as much of a difference versus high value versus low value products.
As we wrap up today, Scott, we're going to talk consumer sentiment and really another improvement.
Yeah. So better, right? So the September consumer sentiment up 2.2% relative to August. I think it's important to remind everyone that the biggest reason for that increase was what was the expectations portion of the index. So it was up 3.3% month over month. And so I think consumers are beginning to see, maybe they're thinking a light at the end of the tunnel. We'll see what happens over the next several days with higher interest rates potentially coming next week, et cetera. But they're continuing to get more positive. However, I think it's important to remind everyone that overall index of consumer sentiment is still more than 18% below where we were a year ago at this time.
How does that play into, I mean, we talk supply, we talk demand, and we know how crucial demand is to profitability on all sides of the agriculture production chain. We're showing small improvements, but we're not getting back to what we would consider a norm. How much longer can demand hold if the economy's still struggling and kind of slogging along?
Yeah. I wish I knew the answer to this question that you're posing, because it's the important one for sure. So we've certainly gone through some economic slowdown. If you look at the forecasts that are out there next year for things like disposable income, it still looks like next year and the year after are going to be good, which might point, Megan, to there's a lot of reasons to be optimistic about demand as we get into 2023 and 2024. However, if we continue to slog along here with, not great economic growth, then I do worry about beef demand. So back to where you and I started this morning, the fact that we have a choice box beef price that is, well below where we were a year ago. Is that because demand is starting to be affected by kind of this general economic slowdown? And I'll go further to say, you and I often talk about how optimistic we are, or I am, at least, about cattle prices. If the economy continues to stumble, do we end up with less beef on the market, yet prices don't move very much? I won't say the probability of that is zero. I still think it's fairly low, but not zero. We could end up in that situation where prices are more muted than we would have thought earlier, just because we don't see some economic recovery coming.
So you're kind of a mind reader, because that's where that was where I wanted to end up. Was I think of, we talk consistently about on a shorter supply side in terms of beef, that really sets producers up for a pretty positive 2023. But if we don't see this broader market recovery, an improvement. Do we still see short beef supplies, higher inputs, and prices that aren't moving accordingly on producers? So then how much does risk management come into play to make sure we're hitting singles and doubles and we're not trying to like hold out for those home runs and get surprised in 2023?
Yep. So I will say, could we actually get to record calf prices soon? We could. And if we do, and people don't take advantage of the market opportunities, then I don't know what to do for them. I think there is, that chance to lay risk off they should be taking advantage of. But I think the point is, when you and I have talked about what could be very high cattle prices, it is demand continuing to stay with us, which, let me say, demand hasn't been weak thus far. The economic slowdown, I think, has hurt us some in terms of what consumers are willing to spend. But when we truly talk about demand, we don't have weaker demand. We just have less income that's driving, our consumption of things like beef. So I just remind us that we have gone through times where demand hasn't been so weak. We haven't seen them recently. And so I think we get ourselves conditioned, or we're used to, hey, beef demand's been strong, pork demand's been strong. Those things can change. I just hope 2023 isn't the year.
All right, that's all I have. That's it for your hot seat this week. As we look ahead to next week, plenty for us to talk about again next Friday.
Yeah, that's right. So we'll get cold storage out next week, along with livestock slaughter, and finish the week with cattle on feed.
Sounds great. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments if you have them. And if you want to check out what's going on the grain side of things, check out the weekly commodity market update with Ben Brown and Brownfield's Phil Robinson. Scott, you have a great weekend. We will talk to you next Friday. Everybody else, do the same. I'm Megan Grebner for Brownfield.